Okay, today we have Roman Gaus here with us, the CEO of Urban Farmers. So I'm not going to give a big intro about you right now. I leave that to you. So first of all, thank you so much for making the time in your busy schedule. I know we don't have too much time today, but I just wanted to get as much wisdom from you as possible from building your business. So let's just dive right into it. Can you give us a little bit of your personal background?
Sure. Yeah, my name is Roman. I'm a 36-year-old. I'm the founder and CEO of Urban Farmers. I live in Zurich, two boys, married, and an entrepreneur now for the last 6 years.
Okay. So, can you tell us maybe just in a couple of minutes, what did you do before that? Have you been in the corporate world? Have you always been an entrepreneur?
Yeah. No, I've been in the corporate world for almost 10 years before I started Urban Farmers. I studied business, and after that went into the corporate world. Worked in consumer goods marketing for Procter and Gamble and Novartis Consumer Health. Then I had a really exciting job at a Swiss industrial conglomerate led by an entrepreneur, a very large industrial conglomerate, where I was the executive assistant to the CEO and the group management. But really, let's say from an entrepreneurial ambition, I always wanted to become an entrepreneur. And so I was very fortunate when my assignment for that industrial company got terminated in the US, that I was relocating back to Switzerland and found myself with a lot of time and where I could finally turn my ambition into reality. So I started Urban Farmers really out of a desire to do so already early on. But I would have never imagined, of course, I ended up growing fish and vegetables in the city. But you just never know where you end up with, right?
Absolutely. So tell us a bit about what is Urban Farmers and why did you start it?
Yeah. So the company develops and operates rooftop farms in the city, growing fish and vegetables. So we have developed a technology that grows fish aquaculture in a closed loop with plants called aquaponics, which allows us to grow produce like salads, herbs, tomatoes, as well as the fish with very, very low ecological footprint. And since we don't require soil, we can grow literally anywhere in the world. And we've decided to make a use case of growing commercial sized food in the city. Now, rooftop farming is relatively new, and you must imagine like a relatively high-end piece of greenhouse sitting on existing commercial real estate, like a mall, shopping mall, or a distribution center, or an office building. And Urban Farmers designs these farms and then operates them also to make a profit out of it and sell the produce into food service, so that's gastronomy channels and retailers, food retailers.
Okay.
So some of our existing markets in Basel, for example, where we operate a rooftop farm for about 3 years, are both large-scale retailers like Migros or local restaurants that want to buy really ultra-local, ultra-fresh.
Okay. Now, this is not the typical startup, and it's even, not the typical business where you just go into a market and, do something that's been done before. It's something pretty much new. It's pretty, it's very new. So you needed to educate people. It's always a challenge to do that. So how did you get that business off the ground?
Yeah. Well, I mean, when we started, of course, everybody did call us crazy, including my mother-in-law that said, basically, you will never be able to, raise a family like this, and what are you doing? And you're throwing your career into the ditches. But I think there is an ambiguity about this, which always helped us, of course, also tell a story which was really revolutionary and quite pioneering and daring. So I would say yes. We had some headwinds in terms of proving that it could work, but of course people are fascinated when you tell them about the potential to do so. So I would say yes, the idea is big, very big, but it certainly helped us also that people do want to see this happening. There's been a lot of support from the very beginning where people said this would be amazing.
Okay, so like, where did you start in the beginning? How did you get the first traction?
Yeah, we. I was lucky enough to meet a co-founder who had the technical expertise. He was a teacher at the University of Applied Sciences in Zurich. I really cold called him and said, "This is interesting stuff you're doing. The technology for me makes total sense from a both from a environmental climate change point of view, how we grow food today is very unstable, and from a economics point of view, I found it very interesting to put these type of farms into cities. So me and Andreas, we started out as a really complementary team. I think this is key. And we were gaining traction very early with the idea to pitch really aggressively in front of both impact and, let's say, traditional early stage venture forums, and did quite well. I mean, we won already a couple of business plans, won prizes, competitions, awards. I was nominated as a fellow from the WWF for climate change, so I had a stipend to work against. So that was that, a really aggressive pitching, networking, and trying to establish the idea in people's minds. And the second thing I would say, which was really critical to get off the ground, is not just talk about it, but actually do it. Really start going into prototypes very early and put reality into things, because that's really, seeing is believing, and that's a really important element of when you're out there dreaming stuff that's not been done before. You need to do it very quickly. So we launched a container farm, basically a small-scale containerized version of our rooftop project, and built these containerized farms and showcased them on different types of events and fairs, and we put them to schools, and they worked with them for a season. So we really had a big traction early on, and momentum, by showing that this would work. And I think the aha moments and people experiencing this live was really critical for us to get going. It's okay, the next step is pilot rooftop farm, commercial scale. It's going to cost $1 million. The next step would be to tackle the technical risks and the commercial risks. So here we go. So having a clear path to market with the type of milestones in place where you can tick off certain things very quickly, I think is super important.
Okay, so like in the beginning, I imagine there were a lot of challenges. Like, what were some of the biggest challenges you were facing, with the growth and with getting the early customers and the early traction and everything?
Yeah, I would say the traditional ones include financing, of course, and HR. So looking for the right talent for us has been quite crucial, because there's a technical complexity, a commercial complexity. It's just not as simple as just building an app. So we need senior people in the team, and that was always a big, let's say, challenge to find appropriate people while you're small and maybe not afford big ticket salaries for management. The second one was financing, of course, trying to raise financing for both the development and then the fixed asset expenditures were really capex heavy. So expenditures for a farm typically are in the millions. So you need to raise that type of money, which at the beginning, when you don't have a proof that it's going to return, is of course very difficult. And I think it all boils down to the fact that you need to have your things in a row. You need to do your work properly, the business plan, and however, I hate to say that, business plans are necessary to convince a lot of people. So you need to really drill down on the economics, find out what are the issues, do the job really. As any other entrepreneur will tell you, then at the end of the day, it's execution.
Yeah, that's a good point there. And I just want to dive into those two challenges quickly. So first I want to talk about HR. How did you solve that challenge with finding the right people, convincing them to work for a startup salary, or how did you do that?
I find in a lot of, especially with impact startups, I think people get to the wrong, they get to see the wrong candidates, because candidates typically feel attracted to the idea of working in a sustainability or impact company, and there might not necessarily be the right talents for what you're looking for. So when I see, for example, an email with a candidate, and we get a lot of cold candidates calling us and saying, I would like to work in sustainability, or I would like to work in something in impact, I usually delete that email fairly quickly because I get to see the wrong candidates. So we hired a professional recruiter and a headhunter for some of the key positions. So we were really structured about our approach of hiring, for example, a CTO, Chief Technology Officer, for developing, designing, and executing these farms, which we succeeded. But after we looked for the guy for almost 1.5 years.
Okay.
Some of it was luck, just purely networking and drinking coffee with a lot of people. And one contact leads to another. And I would say the most critical element of this is, okay, identify who would be right, but be very, very, very honest and very, very, we did mistakes there too, that if it doesn't work out and you see how there's not being the role of the job, be really open and frank and terminate rather quickly. So hire slowly but fire fast. That's what they say, and it's difficult to do, but it's really true.
Okay. Okay. Well, just to quickly get back on one point you made there about people who want to work in sustainability. What's the clash there that you saw?
They have a lot of passion for let's say the idea, the business, but they have functionally they will not fit into what you need to do. And I would say this: I would always hire somebody with passion and maybe not the right 100% right skill set over somebody who has no passion and absolutely the skill set. But there needs to be, you need to hire talent, and there is this truth that if you're hiring B managers, they will hire C people, and it tickles down very quickly. So in management, you have to just seek the best, world-class people, and this is very, very difficult in an economic climate where you compete with corporates, you compete with really nice and really good startups, and of course there is a lot of other impact work that can be done. So creative, right? It's not easy. In my mind, I think it's one of the hardest things I encountered in the last couple of years, recruiting good quality people with the right type of skills at the right salary.
Okay. Now, I want to talk about quality people as well in terms of investors. So, when it comes to investors, you mentioned before it was one of the biggest challenges as well in that process. So how did you get to the right people? How did you identify the right people, and how did you engage with them? Like, how did you start a conversation? Where did you find them? Did you know them already, or how did you go about this?
So again, I was on the one hand quite structured. Did my lists, my research. Knew who I wanted to pitch to, identify what conduit I could use to reach these people. And some of these people are still on my list. I'm still trying to hunt them down for now Series B or whatever, and we've already raised more than 3.5 million, and we're still looking at talking to these people. So some of the processes are quite long, and other things were pure luck. Our first angel investor that invested, the first ticket was 500,000, and she's now invested over 1.5 million in the company to date. She was identified and referred to me from one of our board members, and we didn't know that person actually existed or had actually made any investment in the space previously. So it was really like finding a match that we would have had a hard time identifying just by research. So you have to be really, again, I think here as an entrepreneur, very open to meet and greet a lot of people, talk and sniff your way through the right contacts. I would say a structured approach is helpful, but you have to be really practical about things and grab opportunities grab the bull on its head and really ask for fine. I think I see a lot of people that don't necessarily ask the final question. So, do you want to invest? Yes or no? I've been really sometimes even a bit too direct, sometimes maybe even on that one. I've been always very straightforward with people I met over coffee, dinner, whatever. At the end of the day, there was the question, would you like to invest? And if so, how much?
It really strikes me that you had a lot of clarity. I think that made a big difference. Like being very, very clear where you want to go, who you want to have on board. I think that also made a huge difference. Like it sounds to me very often when I talk to entrepreneurs, they're sort of like in this fluffy stage where they sort of know sort of where they want to go, but not really exactly, and they don't see the clear picture. And
it's difficult, especially for impact startups. I mean, let's be honest. The impact investment scene does not exist, and I really honestly say that it does not exist. And I've studied social entrepreneurship when I was doing my MBA courses at Babson. 15 years ago, I thought impact investment was already happening because of the case studies. And then you go to a conference like SOCAP, which claims to be one of the biggest impact conferences in the world, and you just do not meet these type of people. And when you look at people that are actually making investment in this space, there's very far and few between, and some of them don't even call themselves impact investors. I mean, the angel investor we were getting, I mean, she would never call herself an impact investor. She didn't even hear that word. She was not in that community, and so it's very hard. And I think some of the learnings for other impact startups is that you will find more traction with conventional non-profit philanthropic donors than with investors that are claiming but are not making investments in impact.
Interesting. Okay. So basically, you're saying, okay, if you're an impact startup, it may be a better idea to pitch to the philanthropists and
much better.
And turn them into impact investors than trying to go for impact investors, because it's kind of like it's just a trendy topic that a lot of people talk about. Okay, interesting.
I think impact investing is a bit like teenage sex. So there's a lot of people that talk about it, but very few that actually do it. And you see some of course, very successful impact domains, like the bottom of the pyramid lending schemes. But they've taken 20, 30 years to develop. And the early stage venture capital investment going into impact is very low. It's very low.
So there's a lot of tough times when you start a startup, when you build a business. Like, how did you stay motivated through the tough times, to the in the valleys?
Yeah, that's a very good question. I think, and a key one, of course, you need to draw from your inner motivation. You need to be enthused with this idea, with the potential, and with what you're achieving. Of course, there needs to be a moment in truth where you need to look back and say, have we achieved that, and are we on track? I think that's important, not to lose sight of how things are actually going. But that's one side of the coin. The other side of the coin is, of course, your network, your support network, your family, my wife, my kids, the support you need from your family to actually pursue this is absolutely critical. And the second point is that you need to take care of yourself. I mean, there's just nobody that can do this without proper balance of work life, of recreation versus the job. It can really be consuming. It's more consuming than anything else I've done in the past. And the corporate life is stressful, but it doesn't meet the type of challenges you have as an entrepreneur, and you need to actually deal with that. So, go pick up yoga, do your exercises, eat, sleep, and drink well.
This is a great point you make there, because so many entrepreneurs, they just work day and night, and they wonder why they're so ineffective, why they're not productive, why they're not kind of like moving forward that fast. And it's exactly that kind of point. It's like the chicken and egg problem again. Like, people think they have to be productive all the time and be switched on all the time, but it's so much more productive to be switched off from time to time. Yeah. And and take care of yourself, like you just said it. It's a really, really good point.
Yeah. Yeah. So I did a sabbatical after 4 or 5 years. Now I said, okay, I'm gonna take a sabbatical. It was only 6 weeks, wasn't that much, but I was gone, didn't answer any emails, delegated stuff, and I came back and was quite happy that things didn't fall apart, and things still kept moving, and everybody was happy. And it's not that you have to do everything yourself. I think it's a big realization, which of course I'm still a culprit of, that I take things by the bull and I want to run with it, and not necessarily that's always the best.
Yeah. So just one step back again with the growth. Just a couple of more questions there. Like, How did you get the initial growth going with, sales and revenue? Did you work with partnerships? Did you mainly just go to the businesses directly? Did you go through your network? Where did you start?
Mm. So let's put things into perspective. I mean, we're right now we're projecting about 1 million in sales annually, a run rate perspective, 12 months out, and and the types of project we're working on are very long term. So the farm project development takes place over 18 months, 24 months, so very long sales cycles, and what I can say is this. You need to generate revenues and show that you're actually turning into a business, and so you need to. I mean, sales are the ultimate reason for people to do an investment and do more business with you. If you haven't had any sales, people will not spend money. So create that momentum is difficult, and I've had a very strong view on sales all the time. Um, and I want to see things being booked. And if it's just incremental, here a study, here's some contract work, there a bigger project, and I'm very keen on getting sales in every month. I'm actually, when I'm speaking on conferences, I never do it for free. I always charge. It's small amounts, but I'm charging. We do tours at the farm. We're charging. There's nothing you do free for a startup. You have the highest opportunity cost, so you can't afford.
There's some really good points in there, and with the start, like with the sales. I want to talk a bit more about the sales. Did you hire a sales team? When you started, did you do everything by yourself? Like, how did you get started with this?
I hired a sales business developer quite early on, and like after 2.5 years, we hired another director of sales immediately after. Both these positions were not my best hires, not because of the people, but also because of the job fit. And I would say this: you could technically do without a salesperson as a founder and CEO of a company if you are really good at it. And I think you need to be really good at it. And most often I find that in the early stages, the customers still want to talk to you exclusively. And so you run sales as a CEO. There's no question in my mind that you can delegate this.
Okay. All right. Okay.
So sales is your job. Finance, investor relations is your job. Operations, to some extent, you can delegate. You need to, but I would say sales is yours.
Yeah. Okay. That's a good point. So, one of the last questions, if knowing what you know now, a lot more now than a couple of years ago. So, knowing what you know now, if you could go back, to the start of your company or to the first 1 or 2 years, and if you could talk to yourself back then, what would be like the 3 nuggets of wisdom that would give yourself?
So I would say the first of all would be to engage a slightly higher or larger management team or co-founding team. I think that's definitely helpful to get some traction with the hiring, where usually a smaller team, you only need to start from a base of 2. When you're co-founders of 4 or 5 people, I think makes things easier. Second one is to say, okay, for the financing, let's be less ambitious, because some of these grand plans are just not always happening. So we need to work with smaller incremental funding. We were targeting very large rounds of investment, which we never got. We felt disappointed, but then at the end of the day, they all add up and they're turning to a significant amount. So really hustle up the small tickets. Don't think that you just need to wait for the big rounds to happen, because they will not. And the third point is of growing internationally. I think this for me has been a big aha moment. I've lived in the States, I studied all over the place, but I didn't think that I should aggressively develop the business internationally. And one of the biggest mistakes I think you can make is by staying small and assuming that capturing a small local audience is enough. And it's wrong. You should really go out and target the bigger markets where they are, and they might not necessarily be in front of your home. So you need to go out and do that job. So internationalize sales, marketing very quickly.
Okay. Okay, okay, all right. Some really good points there. So, one of the things you also said in an earlier email exchange we had is, it is really all about relationships. So, can you elaborate a bit more on that when it comes to growth, when it comes to investors, when it comes to the whole venture, essentially?
Mm-hmm. Yeah, for me, it's the relationship piece has been so critical. I mean, you see that most investors, I would say, are not making investment for purely the financial terms. They are really looking at that from a relationship point of view, and so should you as a founder. So if you don't feel comfortable with an investor, or if you don't think that person fits the team, I don't think you should accept the money. The relationships that you develop over time are the company. And so for me, it's everything about that is super important. So, you know, maybe we may go as urban farmers, we might not exist anymore in the future, but what stays are the relationships. So those you take forward regardless. So they're more important than anything else, and that has to do with the type of company you want to be. And once people recognize that they can grow with you and there is potential in creating these type of relationships, it's a lot easier because it's less transactional.
Yeah, yeah. Brilliant advice there. You might basically, what you just said is also, it's your biggest asset. Even if the company goes bust, if you start the next thing, it's like, that's these assets are the things that you take with you. Okay, great. So last question, where can people connect with you and Urban Farmers?
Yeah, it's interesting. I mean, we get a lot of people from all over the world that want to be part of this, and unfortunately, right now we haven't turned the company into a movement. We're actually still a company focusing on our projects, on our accounts, and what you can do generally is, of course, if people see potential of urban agriculture in their cities, drop us an email, say hello, and point us to projects that might be out there. We're also scouting aggressively for people that can help us turn the project into realities. Again, good skill set in terms of real estate development, project finance, marketing and sales, these type of people. Send me your resumes.
Excellent, good. So I'm gonna link, to the website and everything below. So thank you so much for making the time in your busy schedule for this interview, and thanks so much for sharing your wisdom with us.
Sure.
Thank you so much. Talk to you soon. Take care, Robert. Bye bye.